Hey traders, Jason here from Leavitt Brothers. Happy Tuesday. In this video I'm going to discuss how I trade reversals on intraday charts. Okay, my style is simple. I use a couple moving averages, 2 indicators. That's it. Okay, I'm well aware of what the big picture is telling me, but when it comes down to trading, I keep it as simple as possible, as repeatable as possible. Okay, a simple system that you could follow is better than a complex system that will sometimes contradict itself and is hard to follow. Okay, so let's look at a couple trade examples. Okay, here's TLRY. Okay, this is a 15-minute chart covering only 2 days. Okay, so what we have here, we have price going down. We have a positive divergence between price going down, MACD histogram going up. Then we get a pop. Okay, price pops up to the 21 EMA. That pop is enough to cause the MAC to cross up. Okay, then we get one more dip down, and during that dip lacks energy to the downside, so the MACD comes down and kisses its signal line, and then bounces. And at the same time, you get a cross from the stochastic. Okay, so again, you get a move up, which crosses the MACD, then you get a move down, and you get a kiss right here with the MACD, and you get a cross with the stochastic, and that's what I call my kiss and cross trade. And there's your entry. Okay, there's your entry. Simple trade, 15-minute chart. This could be a downtrending stock, but more likely than not, it's an uptrending stock on the daily or weekly chart, but then it's undergoing, a 2 or 3 or 4 day drop within the uptrend. And this is just a way that I use to pinpoint an entry in what would be considered a pullback within an uptrend. Now, it turns out, this is TLRY, and you can look at the price here around 41. It turned out that this trade didn't work out. Okay, it popped up, it closed over here. Okay, so if you didn't get in over here when we started to get the kiss and cross, here's the kiss and cross that I just showed you. If you didn't get in there, then the next day when this candle closed above the 21, that could have been your entry. But as you see, it just dropped right back down. Down, 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 4 consecutive down candles, took out the lows. Okay, so you got to get out. Okay, it doesn't matter what the indicators are saying, it doesn't matter what the market's doing, you just have to get out of the stock. Okay, it's a really good setup, everything was in place, this one didn't work out. But assuming you get out, what happened is, okay, so if you get out, you're talking about getting out, where is it, 41? You're getting out over here when it failed to move up. What happens is, this is a 60-minute chart now, okay? So we get a big move up here, which crosses the MACD, then prices slowly decline, but that decline lacks energy, so the MACD comes down, kisses, and then starts to move up. So there's your entry on the 60-minute chart, and then you can see what it did. It went from the mid-30s to the mid-40s. Okay, so your job is, when you get a really good setup and it doesn't work over here, get out, control your loss, keep your head on straight, and then a week later you get just as good of a setup on the hourly chart and it goes 35%. Okay, protect your downside when it doesn't work, and then stand aside a day, 2 days, 5 days later, you tend to get another setup which can be played, and then sometimes that one's the big one. Okay, but if you stay in over here and you hold it through this, then your head's not on right, and you should be getting in, and instead you're panicking and freaking out and probably maybe getting out. Or when the stock goes like this, you're so relieved that you could get back most of your loss that you don't even realize it's the beginning of the next great move. Okay, so if it doesn't work out, get out, and then stand aside, and you oftentimes get another good trade a few days later. Okay, here's ZS. Okay, you get positive divergence with price being flat, MACD histogram trending up, then you get a bounce, okay, which crosses the MACD up, then you get a pullback, but the pullback simply functions to have the MACD come down and kiss it, and you get a cross down here with the stochastic. Okay, so again, a push up that crosses a cross here, then you get one more move down, which gives you a kiss and cross, a kiss on the MACD and a cross on the stochastic. Okay, so then let's see what happened here. Again, this is the 15-minute chart. So the next day, so if you didn't get in towards the end of the day here when you got the kiss and cross, Okay, if you got in, then you're happy. The next day it gaps up, it pushes higher another 3 points, and you got a nice paper profit there. If you didn't get in, then you're going to have to navigate the gap up. If you don't like it, then I guess you don't trade it. If you don't mind the gap up, if you can zoom in on a 5-minute chart and look for an entry, then you're in good shape. But it gaps up, moves from, like, you know, basically 71 up to 74, so it moves up 3 points, pulls back, and then closes up here. As you can see on this day, it closed up almost $2. All right, so not bad. If you're a day trader, that's not a bad trade. If you're a swing trader, that's a nice entry, depending on what the big picture looks like. We don't know what the big picture looks like. But then this happens. The next day, you get this huge down day, or I should say down candle. This is the 50-minute candle. Stock gaps down and immediately sells off. Okay, so you went from, if you got in here, you had a 3-point profit over here, and then at the end of the day, you only had a 2-point profit, and then at the next day's open, you have a 1-point profit, and then it sells off hard. So again, price rules. Okay, it doesn't matter what the indicators say. You should either be out with a small profit, break even, small loss. Okay, you got to protect yourself. It was a good setup. It was a good stock. It was a good setup and a good group. Everything was on board, but it just didn't work out. So you get out, and let's just say you break even on it. Okay, it's just the way it goes. But if you do that, if you get out, if you control your loss, if you keep your head on straight, then what happens is this. Okay, this big candle here was that big gap down and down movement. Okay, so what happens is you get a positive divergence. This is 60-minute chart. Okay, you get prices moving down, MACD moving up. You get a cross. Okay, price moves up, comes back down, tests the 21 EMA, and comes up. During that time, the MACD comes down, goes below it slightly, and then kisses, and then you get a cross here. Okay, so again, if you control your loss over here, stand back for a couple days, then you get a really good trade on the 60-minute chart that goes for 10%. Like, even if you don't get this trade, this pullback to the 21 EMA at the same time as you get a kiss and cross here is good for 10%. Okay, control your loss when it doesn't work out. Stand aside for a few days. Oftentimes you get another setup, and the next setup works just fine. Okay, because what happens is, this is a really good stock in a good group. The market's doing well, etc., etc., etc. But the timing just wasn't right. Okay, it tried to move up here, and the timing just wasn't right. It needed like a few more days. So stand aside and wait a few days, and then you can get in again. Okay, where traders get themselves into trouble is when they stay in over here. They're sitting in here. Their head's not on straight. When they finally get a move up here, they're like so happy to get out, break even over here, that they completely miss this entire thing. Okay, be willing to take a small profit or small loss here, and then you can nail a big move over here. Okay, we've all been in a situation where we've held a stock too long, and it turns out that if we could have just gotten out and then got back in a few days later in a fresh trade, we'd have been much better off than just holding. Because when you hold, you got a lot of psychological baggage that you're holding, carrying around. Stock's going to recover, but you're going to be so relieved that it's recovered that you're going to be happy just to get out, break even, and you don't even realize that you're in the beginning of the next decent move. Okay, 2 more examples. I'll go through them a little bit quicker because you guys are getting the hang of this. Okay, 60-minute chart, ZM, positive divergence. You got price going down, MACD histogram going up. You get a cross, price goes up, comes back down, goes up. During that time, you get the MACD crosses, comes back down, kisses, and moves up. At the same time, you get the stochastic over here, crosses. Okay, so again, the sequence is it moves up, and when it moves down with a small enough amount of energy that you get a kiss and cross with the MACD and stochastic, and then you get the beginning of the next move. Okay, so stock closed right here at about 80. Let's see, let's move the chart forward one day. Okay, so next day, stock simply continued up. Okay, so the end of the previous day was here. Okay, and the stock moved up, came back down. If you're looking for a stop, the 21 is a good place. Okay, the 21, which is the orange line here, supported the stock here. It was resistance here, it was resistance here, it was resistance here and here. And as you can see, it's starting to support the stock here. Okay, so you can get in and ride it with a 21. Maybe you get lucky and it goes up here. Maybe it falls down and you got to get out. Okay, be comfortable taking your risk. Be comfortable being in a position not knowing what's going to happen. Manage risk to the downside, and you'll be surprised how well things go for you in the long run. Okay, I don't only do this with individual stocks. I also do this with the overall market too. Here's SPY. Okay, 15-minute chart. Price goes down and then down again. We get a positive divergence to MACD histogram. Again, we get a cross of the MACD. Price moves up just enough to cross the MACD up. Then it comes back down one more time. During that one more dip, we get a kiss with the MACD. We get a cross with the stochastic. So there's your entry. And the stock goes up. Now after that, I don't know. Maybe it'll go like this. Maybe it'll just flutter and do this. Okay, you don't know what's going to happen. So your job is to get in, put a stop in place, and let it go. All right, thanks for listening. I hope you got something out of it. Again, keep it simple, keep it repeatable, control your risk. Oftentimes, the reason you're playing a stock is because it looks really good, but if you get in, if you play it early, maybe the stock's just not ready to go yet. Okay, step aside, take your small loss, small profit, step aside, wait a few days, maybe a week. Oftentimes you get an even better setup a few days later, and then that's the setup that really makes you good money. But if you stay in the original position, then your head's not on right in order to nail that second move. Okay, so if you liked the video, want me to do more, give it a like, share it with your trading friends. You can also subscribe to the channel right here on YouTube and be alerted of new content when it's posted. Come check us out at Leavitt Brothers. We provide market analysis and trading ideas to individual and institutional traders and investors. Again, thanks for listening, and I'll see you next time.